Good morning, and you're watching Market Cafe on ET Now with me, Vinny Motiwala. Along with me is Lisa as well. Lisa, very good morning to you as well. And obviously that festival of Ganesh Chaturthi has begun. Right. The joyous and vibrant festival and celebrations that have started as well and kicked off across India, bringing together a harmonious symphony of devotion. Now in Mumbai, which is the heart and soul of the grand festival, the atmosphere is nothing short of magical. The city is known for its pomp and splendor during this time. Now is bed checked with elaborate decorations, colorful pandals and larger-than-life idols of Lord Ganesha. The festive fever is beginning to be witnessed across the country, and unique themed pandals and eco-friendly Ganesha idols. The festival menu features an array of mouth-watering sweet savory dishes, with modaks taking the center stage. These are believed to be Lord Ganesha's favorite that sweet shops have prepared in different varieties.
Well, let's go to the US market and let's see what are the indices doing, what's the handover coming in from the US market. Well, it's the FOMC day when investors will keep an eye on the rate decisions. Largely, the participants are expecting that the rate hikes, that there won't be any rate hikes, and it will largely remain unchanged at around 5.25 to 5.5%. According to the CME, Fed Watch traders are expecting a 99% probability that the Fed is expected to skip rate hike. Remember that the last Fed hike that took place on July 26th, but that was during the earnings season, and this time traders are pricing in a 29% chance of a hike in November. More than the rate hikes, there will be focus on the commentary coming in from the Fed, the economic projections, as well as Powell's press conference. Meanwhile, if I look at the indices performance, the S&P 500 and Nasdaq Composite, they both shed around 0.2%. Dow ended more than 100 points down. And if I look at the US dollar index, that rose amid the deteriorating market conditions as well as higher US Treasury yields. If I look at the US Treasury yields, that's at around 4.37%. It's the highest level in 16 years. So that's the handover coming in from the US market. But if I look at the European market, they closed slightly lower, and the FOMC meet ahead, that actually rubbed off on the European market as well. DAX was down around 0.4%. Stocks is down 0.04%. CPI, that data is expected today, and that is expected to notch higher to 7% in August versus 6.8% in July. And the Eurozone inflation data for August, that was revised slightly down from 5.3% year on year to 5.2%. So that's the handover coming in from the European as well as the US market. But talking about the crude check, Vinny, the crude prices are rallying, and that may actually act as a headwind to what's expected in the FOMC meet.
Absolutely. Crude prices are rising. That could be a headwind, but we've seen a mild bit of at least a subdued performance overnight coming in as well. When you look at it, yes, overnight we saw a rise, but this morning a bit of a fall coming in because Brent crude oil prices have seen a decline of around 0.2% in trade as of now. And look at Brent crude oil prices trading, below the $95 per barrel mark as well. So obviously, after hitting that 10-month high, we're seeing some bit of a correction coming in there. Now, is this going to be a major correction? That is something to watch out for. As you know, investors seem to be, after the 3 sessions of gain that we've seen coming in for Brent crude oil, slight bit of a fall in Brent crude oil prices this morning. Following, that a rise in price of oil was mainly because of the production cuts from the Saudi Arabia as well as Russia as well. Now, obviously, because after this that have come in, we're seeing a bit of a correction coming in the Brent crude oil prices. Let me just take you all through, what are the concerns over, what the rise in oil prices was mainly with the concerns over the tightening supply as well, which was a major issue. And like you were mentioning, that could impact in terms of, overall the workings as well as the FOMC meet, how that shapes up as well, and fears that increase in terms of the oil prices. That's a concern that that we watch out for as well. But as of now, this morning, Brent crude oil prices, when you look at it, down 0.2% in trade. Let's keep an eye out on that one. What is WTI crude oil doing? WTI crude oil is a bit muted this morning. 91.21 is what per barrel is what WTI crude oil is trading at. So yes, seems like some bit of an easing at least coming in for the oil prices from those 10-month high levels, Lisa.
Well, thank you, Vinny, for that. But let's look at the important events lined up today. As mentioned earlier, the biggest cue that market participants will be eyeing this morning, it's the outcome from the Fed Reserve. And like always, the central bank's future projections hold more significance than their policy stance. Street largely expects Fed to hold rates with a meager 1% chance of what could be the 12th rate hike since March of last year. A likely US government shutdown at the end of the month. However, that could urge the central bank to raise rates in the November meeting. This is according to analysts at PIMCO.
And one will definitely look out for the comments that will be coming in from the Fed Chair Jerome Powell as well. So that is something that we are keeping an eye out on. Let's go across and actually listen into what Arnav Das, the global market strategist at EMEA, had to say as well.
Our view is that there will be a pause. We're not expecting a subsequent hike, but that's our view. I think the Fed, as you say, is data dependent. I think they're on hold because inflation is coming down. Growth is holding up reasonably well, although there are clear signs of slowing. The labor market is a little softer than had been thought previously, although it's by no means loose. It's still fairly tight. And the economy generally seems to be fairly resilient. And I think those are all reasons why the Fed's going to remain on hold, right? And so and wait to see how the data evolves, how the economy evolves. I think they're not in a position to give forward guidance because we're in such in many ways such uncharted territory, right? We have a fairly low unemployment rate, below what had been anybody's estimate of the kind of the natural rate of unemployment. And we have a big budget deficit because of various fiscal programs, including subsidies for the industrial sector. So I think if you put all of that together, we're on a kind of, let's see what happens kind of mode, sort of steady as she goes. But let's be prepared to react when it becomes very clear that the economy is either still too strong or actually continuing to soften and headline inflation is coming down significantly. I don't think we're going to get very clear indication of that for a little while. Hence, the idea that we're on a kind of extended pause in this kind of bumpy landing that we're going through.
Right. But Arnab, one cannot deny the fact that the Fed really uses its commentary as a tool more than, the rate hikes. Can we expect a more dovish stance now, or will we expect a pause with a hawkish stance from the Fed?
I think we'll expect we should expect a pause with a kind of neutral stance, right? In the sense that I think, you still have some members of the committee that are more dovish and some members that are more hawkish, and Powell perhaps leaning slightly more hawkish, but less and less so with each passing meeting. And of course, the September meeting is an important one because one of the quarterly ones where we'll get projections, the so-called dot plot. And there, I think we'll obviously see the range within the committee without knowing the names of the individual dots.
Let's keep it and stay with the policy actions, because in China, that has left benchmark lending rates unchanged at the monthly fixing, largely in line with what the street expected. Now, this comes amid the signs of economic stabilization and a weakening yuan, constrained further of the easing as well.
And staying with the macros, global debt has inched to a record high of around $307 trillion in Q2. And this is despite the rising interest rates curbing the bank credit. Meanwhile, the debt levels in US has hit a historic high, surpassing $33 trillion. And this comes after a roughly 50% increase in federal spending between FY19 to FY21.
And U.S. Treasury Secretary Janet Yellen says that the growth needs to slow its pace more in line with the potential rate to bring inflation back to the target levels as the U.S. economy is operating at full employment. Meanwhile, she adds that the demand-supply imbalance in the labor market have abated, which is a healthy sign for the economy.
And retail giants Amazon as well as Target are going on a hiring spree ahead of the holiday rush. Amazon plans to hire around 250,000 workers. Target also said that it will be hiring as many as 1 lakh workers while also offering discounts as early as October. The moves come in the backdrop of predictions that sales growth during the holiday period could be half of what it was last year due to higher prices denting spending as well as worries of a recession.
And on day 2 of the special session, Lok Sabha and Rajya Sabha held their sitting in the new Parliament building. Prime Minister Narendra Modi urged PMs to MPs, I beg your pardon, to reaffirm the commitment to make India a developed nation by 2047. Described the move to be the new Parliament building as the beginning towards a new future. He said that Indian aspirations are reaching heights that may not have been seen in the past 1,000 years. Meanwhile, the Women's Reservation Bill was tabled. Opposition leaders have welcomed the move but questioning the delay. Listening to what Prime Minister Narendra Modi had to say.
भारत अनेक सिद्धियों के साथ नए संकल्प लेकर के नए भवन में अपना भविष्य तय करने के लिए आगे बढ़ रहा है। विज्ञान जगत में चंद्रयान 3 की गगनचुंबी सफलता हर देशवासी को गर्व से भर देती। भारत की अध्यक्षता में G20 का असाधारण आयोजन विश्व में इच्छित प्रभाव, इस अर्थ में ये अद्वितीय उपलब्धियां हासिल करने वाला एक अवसर भारत के लिए बना। इसी आलोक में आज आधुनिक भारत और हमारे प्राचीन लोकतंत्र का प्रतीक नए संसद भवन का शुभारंभ हुआ है। सुखद संयोग है कि ये गणेश चतुर्थी का शुभ दिन है। गणेश जी शुभता और सिद्धि के देवता है। गणेश जी विवेक और ज्ञान के भी देवता है। इस पावन दिवस पर हमारा ये शुभारंभ संकल्प से सिद्धि की ओर एक नए विश्वास के साथ यात्रा को आरंभ करने का है।
Well, now shifting focus on the cues and the events to watch out today. As we highlighted earlier, US FOMC rate decision will be in spotlight today. And on the domestic front, corporate action front, it's the last day to buy PFC before the bonus issue of 1:4 ratio. Supriya Life Science will hold its investor day today. And on the IPO action front, Yatra Online IPO closes for subscription. And Sai Silks IPO, that will open for subscription today. Signature Global IPO also opens for subscription. On the AGM, we have Greenply Industries, Star Health as well as Gokuldas Exports that will be holding their AGM today. And with that, let's slip into a short break and we will be marking the Asian market after this break. So stay tuned on the show.
Now, let's look at some of these tax collections, what have come in as well. You know, advance tax collection actually in India have risen 20% at 3.55 lakh crore rupees in the first half of FY24. That's from April to September 16th. Even the gross direct tax collections, when you look at that, they were up by 18% during the same period as well. And the net direct tax collection grew by 23%. The tax collections include personal as well as corporate tax. In fact, the tax refunds worth rupees 1.2 lakh crores have been issued as well. Let's go across to my colleague Sumit Chaturvedi, who's here to give us more details on this. Sumit?
In a development that shows success of government in enforcement of overall tax collection measures and use of tech in also tax collection, India's overall tax collections have gone up. We have figures available with us till September 16. Let's begin with direct tax, and here there's a jump of 23.5% and the amount collected is 8.65 lakh crore rupees. It includes corporate tax, which is of 4.16 lakh crore rupees, and personal income tax of rupees 4.47 lakh crore rupees. These are the figures of direct tax. We come to advanced tax now, and here we see it's gone up 20.7% at 3.5 lakh crore rupees. Also, it includes corporate tax of 2,80,620 crore rupees and personal income tax of 748.58 crore rupees. So these are figures which have been released today. Government at different intervals release these figures which are of use, and that's what keep on happening. These figures have been released. So far, it shows buoyancy in economy as well, as far as it shows success in efforts of the governments when it comes to enforcing these tax collection measures, including use of IT in tax collection.
Well, thank you, Sumit, for taking us through that, the tax collection data. But according to the latest RBI bulletin, despite a challenging global economic landscape, India's economy is bolstering its resilience as well as growth. My colleague Ankur Mishra is joining us with more details on this. Over to you, Ankur.
Yes, Reserve Bank of India's bulletin is indicating that September inflation numbers may be easing out, and the bulletin says that although August numbers were above 6% at 6.83%, but from September onwards there might be some easing. Remember, Reserve Bank of India Governor Shaktikanta Das has also indicated earlier that vegetable prices softening may happen from the month of September. Hence, expectation is that the inflation may start falling, and this may happen from the month of September. That means the current month itself. Now, as far as the growth is concerned, the bulletin says that India has done well amid the slowdown concerns which is there all over the world. In fact, the G20 presidency under India has concluded, and in that the outcomes does assume significance in the kind of global scenario which is there. The bulletin also talk about foreign portfolio investors who remained net buyers consecutively for 6 months. As far as the equity flows are concerned, India has attracted highest equity flows among emerging market peers, and the bulletin doesn't stop here. It also talks about Chandrayaan and how India can contribute more into the world space economy, where it stands as just 2%, but with the rising private participation, this number is set to grow.
Okay, thank you so much for that, Ankur. But, look at the PSU banks. The Nifty PSU bank has been the, when you saw on the Monday close, that was the top sectorial gainer as well, has been gaining in the last 5 trading sessions, also has been an outperformance in terms of the sector-wise as well. Now, PSU banks, why are they on a tear? Clearly outperforming the private bank peers as well. What is driving this move? Why are they, seeing this sharp run-up? Let's go across to Harsh, who's here to give us more details on that.
Well, yes, PSU banks are in focus largely because the re-rating seems to be going on, and essentially what we're seeing is PSU banks in terms of their price to book comparable versus their 5-year averages are well beyond their 5-year averages. In fact, they're very close to now doubling up on some of those 5-year averages. They are on almost a decadal high. Some at a 7 and 8 and a 9-year high are where few of the PSU banks are currently placed at. What we are seeing is that a lot of the asset quality has now improved over the years, and they've provided for a large chunk of the bad loans. Recoveries, in fact, are in progress for most PSU banks. You are seeing a tailwind in terms of the recoveries, and with it, credit growth is extremely robust in the system. You are seeing double-digit credit growth in the system, especially financial year to date, definitely nearly a 15% credit growth in the system. So you are seeing across the board there is a very solid tailwind. Of course, with credit growth, what's also important is to mix and match it with adequate capitalization, and these PSU banks currently are very well capitalized. At the start of 2020 as well as 2021, you did see the government also capitalize some of the PSU banks, aid it with further capital, and that's what's really pushing growth. And with adequate profitability now, profits are also adding to that growth. So there's a good solid tailwind for PSU banks, which is really pushing the rally forward.
Thank you so much for that, Harsh. Surely keeping an eye out on those PSU banks. What do they do in trade today as well? Will this run up continue? Is something that we're watching out for. The re-rating that Harsh was talking about. Let's keep an eye on that. But let's move on. And as the festival season is here, SUV maker Jeep India is looking to double its monthly sales to 1,000 units, riding on the new affordable version of its existing portfolio. Now, the iconic brand Jeep, now part of the Stellantis Automotive Group, has launched the facelift variant of its Compass SUV, which is at a pricing of 20.49 lakh rupees, lowering its price by around 6 lakh rupees. ET Now's Sumit Chaturvedi again is here to give us more details on that, as because he caught up with Aditya Jairaj, who's the head at Jeep as well, on the move of the perspective about the company, the strategy and the plan. So let's go across and listen into the snippet.
Jeep started off out of need in order to be a 4x4 and SUV company. So we started building SUVs and 4x4s, and today we continue with the same DNA. So on that note, new for model year 24 are 4 major items. One is on Compass. We have a refreshed front fascia and new wheels. We have a special edition called the Black Shark Edition, which I think you may have seen. It's a blackened theme interior with red highlights. Again, makes it very beautiful, not just from the exterior but also from the interior. Third, and I think this may be the biggest thing on Compass, we are introducing automatic transmission on 4x2. So earlier we had automatic transmission only on 4x4. Now we have it on 4x2. And 4, on Meridian, that we launched last year, listening to the voice of the customer, we have increased the plushness and the comfort quotient with the new special edition that we're launching in market for model year 24, which is Meridian Overland. So with the special edition Overland, you have suede on the IP and also suede on the seats, which usually is only available in premium cars in the luxury segment. We've got a new grille, we've got new wheels, and again increasing that plushness quotient on the Meridian. So lots of action on the Compass and also lots of action on the Meridian.
How do you prepare yourself now, preparing yourself for the coming festival season? Is that going to be your offering, and how do you expect it to be now? Is it going to be better than last year? Because this time, for the first time after 22, when there was pent-up demand of COVID, it's going to be a full normal year. So how do you see the coming festival season? What's your offering going to be?
So yes, we will be showcasing all these products for the coming festive season. Shipments of the new Compass have already begun. Meridian will begin in a couple of weeks. And what does all this mean for us? Our expectation is, compared to the last few months, our sales in the next quarter will double.
Okay, that's a good target you have kept for yourself. But Aditya, I want to understand one more thing. When government is becoming a bit agnostic about diesel engines, but you are having this diesel option, are you okay with that? Like, with the demand for diesel, it will stay there?
So at this point in time, Sumit, if we see, C segment is still majorly diesel. The mix of diesel may be coming down, but still there's a huge chunk which is diesel, and D segment is almost all diesel. So today, diesel is prevalent. And again, we have to understand why maybe there's this push away from diesel. It's all for our environment, it's all for emissions. Now with the new BS6 stringencies, the tailpipe emission actually is more stringent on diesel versus petrol, right? But again, nonetheless, it all boils down to what happens to customer demand. Customer demand is increasing for various reasons, regulatory reasons also when it comes to petrol. So we as Stellantis and Jeep are constantly evaluating what we need to do. So bringing petrol on Compass is definitely on the cards. Bringing back petrol is definitely on the cards.
And with that, let's slip into a short break. But stay tuned on the show because more news and announcements, stock-specific news will be discussed on the other side of the break. Stock-specific front. And for that, we have Vamakshi who will be taking us through all the stocks that you have to keep on your radar for today. Over to you, Vamakshi.
Well, yes, let me first start off with IOCL, BPCL, HPCL, MRPL as well as Chennai Petrochem. A whole host of these counters are in focus today because the CRM, Singapore GRMs have actually dropped to $8.1 per barrel, and this is in fact the lowest level that it has hit since July 26, 2023. So on the back of that, this is a negative news flow, so you keep an eye out on all of these counters. We also have a whole host of realty stocks that are based in Bangalore in focus: Prestige Estates, Shobha, Purvankara as well as Brigade Enterprises. And this is because the government of Karnataka has announced an increase in the guidance value or circle rates for property in Bengaluru. The rates will be raised by an average of nearly 25 to 30%, with some areas seeing an increase of up to 50%. Other than that, we also have HDFC Bank on our radar, and that is because Shashidhar Jagdishan's reappointment as HDFC's MD, HDFC Bank's MD and CEO has gotten the RBI nod. Tata Motors will also be on our radar today because the company has gone ahead and increased its prices of its commercial vehicles with effect from 1st October up to nearly 3%. Blue Star, the QIP opens for issue up to nearly 1,000 odd crores. The floor price has been set at 784.55, which is actually coming in at a discount of approximately 2%. Biocon will also be in focus because Peter Bain has been appointed as the group CEO, and in fact, just to give you a brief of Peter Bain, he was actually the CEO of Syngene for the last 5 years. We also have Zydus Life in focus, and that is because the company has received 0 observations from the US FDA from inspection of Ahmedabad formulation manufacturing capacity. Keep an eye out on Bharat Dynamics as well because the company has bagged 290 crore missile order from the Indian Air Force, and this contract with the IAF is for the supply of surface-to-air missiles. And lastly, keep an eye out on RR Kabel because the stock is expected to list on exchanges today. The issue price was at 1,035 rupees per share. The total subscription for this counter was around 19 times, and we're expecting a premium listing. So on the back of that, keep an eye out on these counters.
Okay, Vamakshi, thank you so much for that update over there in terms of the stocks to watch out for. I would also keep an eye out on some of the stocks that have exposure to Canada as well, given that we're seeing a bit of an tension between the two nations, India and Canada. So Canada Pension Fund, where they are holding some of the companies are Kotak, Delivery, Industars, Paytm, Nykaa, Zomato. This is some of the data that we are understanding that they're holding as well. So let's keep an eye out on these stocks as well, or where we have Canada exposure as well. But let's look at what the brokerages are saying this morning, and we have a couple of brokerage notes that are coming in, and especially a couple of them coming in from Jefferies. First, let's talk about the India strategy note that has come in from Jefferies. They said G20 was a success. Obviously, that's given a bit of a positive noise in the international trade. Rising oil prices are a bit of a worry. Meeting, with the RBI signals some comfort on with the CPI forecast as well. So yes, that's there. But no fiscal headroom. They see pressure on PSU divestment is something that they are likely watching out for. And what they're saying is they're tactically reducing the portfolio beta and trimming the weight on mid-cap industrials and property as well. They're bringing consumer staples to underweight rating, shifting weight to Bharti is what they're saying, and they would look to buy the dips in the medium term. Appears that there's a bright spot there with the ongoing capex cycle recovery, so maybe buying the dips is something that they would be looking at. Let's move on and talk about what Jefferies is talking about specifically on the oil and gas space. Now we have the OPEC plus production cuts as well as the low US inventories that is likely to keep the oil prices a bit elevated. In terms of the stocks, they are keeping an eye out on the oil and gas front. Reliance, limited impact is what they see there. City Gas Distributions, limited impact over there as well. GAIL, beneficiary of the high oil prices, and OMCs, they cut FY24 expected EBITDA over there. BPCL they are downgrading it to an underperform from previous hold. They've cut the target price to 310 rupees from previous 425 rupees per share. Also for GAIL, they are upgrading the stock to a buy from an underperform. They've hiked the target price over there to 136 rupees per share from previous 105 rupees per share. Yes, so a downgrade coming in on BPCL by Jefferies and an upgrade coming in for GAIL by GAIL by Jefferies as well. Let's also talk about JSW Energy, where Jefferies is actually maintaining a buy rating, hike the target price to 500 rupees per share from previous 365 rupees per share. They believe they have a niche private sector renewable energy play which will work out well for the company. So that's what the brokerages are talking about. Mainly a lot of notes that have come in from Jefferies this morning.
Thank you, Vinny, for taking us through that. But it's the IPO season, and a couple of IPOs are expected to hit Dalal Street this week. So let's go across to Vamakshi to get a stock of all these IPOs.
Well, in fact, 2 IPOs are expected to open today itself with the likes of Sai Silks as well as Signature Global. Let's first look at Sai Silks. Now, the price band for this IPO has been set between 210 to 222 per share. Sai Silks is expecting to raise nearly 1,201 odd crores with a fresh issue of almost 600 crores and an offer for sale of 601 crores. Now, let's look at what the company actually does. So, it is amongst the top 10 retailers of ethnic apparel, particularly saris in South India. They have a dominant presence in Telangana as well as Andhra Pradesh, and in fact they boast of a store network of almost 54 stores as of 31st July 2023. Largely their product mix is dominated by saris, which accounts for nearly 69% of it. Now, when you look at the company's financials, the company has posted a good set of numbers overall, with revenue growing at a CAGR of almost 26% in the last 3 years. They've also managed to improve their operational efficiency, and as a result, we've seen the EBITDA also grow at a CAGR of almost 51%. The margins as a result have also seen an improvement from 9.21% in FY21 to nearly 15% in FY23. Their return ratios as a result have also improved, with ROE at nearly 27.96% in FY23, which is a significant improvement as compared to the ROE seen in FY21 of nearly 2%. Moving on to Signature Global, this IPO is also set to hit the markets today. The company had earlier intended to raise about 1,000 odd crores via primary markets, but the company has gone ahead and cut its IPO size by nearly 27% and will now be raising around 730 odd crores, out of which the fresh issue is worth 603 crores, and there is an offer for sale of nearly 127 crores coming in from the International Finance Corporation. The price band for this IPO has been set between 366 rupees to 385 per share. Now, as to what Signature Global actually does, it is a real estate developer with a main focus on affordable housing. In fact, it is the largest developer in the Delhi NCR region in the affordable as well as the lower mid-segment housing. In fact, most of its projects that are completed ongoing, and in fact they are largely located in Gurugram as well as Sona in Haryana. And when we look at the proceeds that they will be raising, the fresh issue will be used in order to repay debts amounting to nearly 432 odd crores, while the remaining is expected to be used for inorganic growth through land acquisitions as well as general corporate purposes. Apart from that, the company's sales have actually grown at a CAGR of nearly 42.5% during the last 3 years. We've also seen their net loss narrow. In FY23, they reported a net loss of 63.7 crores, while they've reported a loss of nearly 115 odd crores in last year. So all in all, these were all the IPOs that you need to keep an eye out for.
Okay, Vamakshi, thank you so much for that. Surely keeping an eye out on those IPOs and the action on that front. Thank you so much for that, Vamakshi. Let's move on and talk about HDFC Bank. They did have their analyst day. Some of the highlights that came in was in terms of the credit cost, which they said would fall as HDFC had a low credit cost. But in terms of margins, they said that will also fall by 25 to 30 basis points. What are the brokerages saying? What are the key highlights coming in on that front? Let's go across to Sharad, who's here with that list of the key highlights as well as the brokerages, what they are saying. Sharad, good morning. And what is it all about the HDFC Bank Analyst Day?
Well, yes, the brokerages have turned cautious, and look at Macquarie. If you look at it, they have maintained an outperformance with the target price set of roughly 2,110 rupees per share. And they did state that the merged numbers, they have actually come out with some negative surprises. And that is something to look out for. And of course, there was a one-time impact also, which impacted the net worth by roughly 5% odd. If you look at Morgan Stanley on HDFC Bank, they have maintained an over rating with a target price of 2,110 rupees per share, and also they have stated that post the merger, the overall net worth, that the numbers were expected to be on a higher level, that has actually come below the street estimates. If you look at Investec on HDFC Bank, they have maintained a hold rating, but they have cut the target price. Earlier it was 1,735 rupees per share, now that's down to almost 1,690 rupees per share. Also, they're estimating that the EPS CAGR of 11 to 12% would be expected over the next 3 odd years. Now, INCRED also came out with its reports on HDFC Bank, and they have maintained an ad with a target price set at roughly 2,000 rupees per share. However, in the margins front, of course, in FY24, they are expected to remain under pressure due to the excess liquidity coming in. Lastly, I'd like to point out Jefferies also on HDFC Bank, where they have given a maintained buy rating. However, the target price has been cut. Earlier, it was roughly 2,100 rupees per share. Now it's 2,030 rupees per share. Now they are expecting that the impact on the NIMs would be there tad bit more expected than what was seen. So overall, the street seems a bit cautious, and even the brokerages have kind of given their cautious note as well.
Well, thank you, Sharad, for taking us through all those details on HDFC will be in focus today. But with that, now it's time to wrap up on this edition of Market Cafe. But do stay tuned on the show, on the channel, because more action on the market ahead.